Now let's go to someone who really knows Zynga and its CEO, Mark Pincus. Paul Martino was one of Zynga's first investors. He's with Bullpen Capital and joins us now from Philadelphia. Paul, welcome to Bloomberg West. So first of all, congratulations on what looks like a great investment. I want to ask you how the original idea came about. What was the original concept for Zynga and how did it evolve?
Yeah, it's a great question. Mark Pincus, me, and two other people started Tribe Network in Christmas time 2002. And while Tribe was not a big success that became Facebook or LinkedIn, we learned a lot of interesting lessons. And the lesson that Mark learned was there was a massive amount of time being spent on social networks. And after you met your buddies and exchanged some photos, there was nothing else to do. And so his instinct that led to Zynga was, let's give them games to play, because that should be a really good way to actually monetize those users. And it was one of those great moments where the original vision of the company was implemented very well, and the success that's demonstrated in the S1 is what we see.
So you're also very good friends with Mark Pincus. Explain to me his businessman acumen and how he has led this company to this point.
Yeah, Mark is a truly visionary leader. He uses a phrase in there, macro. It's right in his discussion, and that was always the phrase he used when we were doing Tribe. He was always saying there's this big new macro out there, and that's that this time is going to get spent in a social context. Being in a social context is a better way to find a date. It's a better way to find someone to go out with. It's a better way in which to play a game. And so that idea of a macro is always how he's run his businesses. He likes to say that he wants to swim in the right pond, and by swimming in the right pond, good things will happen.
Now, there's a lot of information in this S1 filing that even you haven't seen before. What do you find most impressive about the numbers?
I think one of the most impressive things is what's buried in there when they talk about the competition. If you take the 2nd through 15th largest competitors in the social gaming space, take number 2 through number 15, add them all together, Zynga is bigger than the next 15 together. That's an amazing statistic. If you asked me at the early stages of Zynga if it was going to be a winner-take-most business, I would have said no. It'd be more like ABC, CBS, NBC, 3 or 4 big winners emerge. But the fact that Zynga is really a winner-take-most business is truly amazing to me. And that volume of data they get off those 250 million users ends up being their secret weapon. They're able to know what people like faster than any of their competitors, which allows them to keep churning out the hits.
All right, now let's bring in Corey Johnson, our editor-at-large, who's been pouring through the S1 filing as you have, Paul. Corey, go ahead.
I have been. I've been modeling the company as well, but we just pulled up that chart of of Zynga's revenues. It's a really big number. Paul, we talked about this a few weeks ago, and you said that I would be amazed when I saw the numbers. Indeed, I am. The growth in the company is really interesting because the growth of users hasn't been as terrific as the growth in revenues. Why is that?
Well, it really comes down to what % of the users monetize. And I looked through the document for the past couple hours, as did you. I didn't see them disclose the number for the % that actually monetize. But clearly, this is where the growth story will be. You know, 250 million uniques or so is a pretty big number, even though it's flatlined year over year. If they're going from, say, a rumored 2% to a rumored 5% as the result of increased engagement measures, that's a significant upside to the stock once it goes public.
Yeah, and also interesting to me that you're right. I didn't find that number. I shouldn't say you're right. I also did not find the number of the exact percentage of users, but they did suggest that it's very few of the users are paying. But it also seems that in the description of how they imagine their business, free is really important to them. When you're investing in a business at such an early stage, I don't know if you'd like the word free so prominent in the business plan.
Right. Well, look, this is really one of the first of the next generations of the kinds of companies that are really going to be the growth drivers for the U.S. And think about it. This company is a 100% online entity. It makes money selling virtual goods to people in a purely online context. So all of the capital costs associated with most businesses don't exist here. And as a result, it, I think, will be one of the most profitable businesses we've seen. Think about it, 0 to almost $1 billion in revenue in under 4 years. You know, Mark called me to help him hire the first 2 people to write the poker game in the summer. I think it was July of '07. Right? That's 4 years ago. That's an amazing story when you think about it.
Paul, I want to talk to you a little bit about how Zynga has gotten to this point. I think most people would agree the numbers in the S1 filing are very impressive. But over the years, Zynga has had its critics. Michael Arrington of TechCrunch has referred to Zynga as Scamville. The company has been accused of stealing game concepts. How do you respond to that?
Well, I think the whole Scamville thing from Mr. Arrington was a little overblown. And I think what you see once you look at the S1 is since the percent of revenues associated with advertising, which is what Scamville was related to, versus virtual goods sales is what it is, I think that's why we haven't heard much about it in the past year. It was a big story a year and a half ago. We haven't heard much about it since. And when you take a look at the ratio of advertising revenues to virtual goods sales, I think that's the story that the S1 tells clearly.
Does it concern you how much Zynga relies on Facebook?
Well, I mean, as you said on the lead, 204 times the document appears in there. And certainly there's a huge reliance on Facebook. But let's think about it from the other side. You know, people talk about the détente that got negotiated between the two companies in regards to having to accept the Facebook credits. How much percent of total revenues are Zynga for Facebook? And so I think this is a very symbiotic relationship. And while there could be reasons why it would go south, right now it's in both companies' interests to stay very friendly.
Do you think it's important that Zynga try to diversify outside the Facebook platform?
Well, certainly that's been an objective of the company from day one. I mean, they launched with MySpace. They were on other platforms like High5, et cetera, along the way. And when the company started, recall, MySpace was the king of the hill at the time, and Facebook was coming on strong. So the company's been very clever in the ways at which it's adopted whatever the preponderance of the users are in terms of what platform they're on. And it's turned out that Facebook is the big gorilla now, and I think perhaps that'll change over time as well. It appears that this might not be a permanent winner-type business in the social networking space.
All right, Corey, you've also been taking a close look at Zynga's business model. Go ahead.
Yeah, Paul, I see the insiders. I mentioned the insiders are not selling in this deal. It's something you rarely see. However, this is a new era with the secondary markets, and they did sell a lot of stock coming almost right up until this deal, until just a few months ago. A couple $100 million. Well, I'm looking at the filing right now. Mark Pincus alone sold $110 million worth of stock as a private company still. Two questions. Did you sell any, and what do you make of the insiders selling like that?
Yeah, and I think if you take a look at this document in comparison to documents from Groupon, et cetera, I think what you're saying is exactly right. These numbers and the amounts sold by the insiders in the offering are significantly lower to negligible in comparison. So the idea that they've taken some money off the table, I think, was a common sense kind of move to make along the way. It's something I did as well. I had an opportunity in a secondary market transaction to be able to sell some stock in the company. And when you have such a gain, you know, I'm in a nickel. And when you're in a nickel and someone's offering you $14, $15 for your shares, it seems prudent to take a couple bucks off the table.
So in this deal, I mean, at what point do you let it ride? At what point do you think you might get out with the rest of your shares? Do you have a plan already?
Well, I've adopted this strategy as the result of being involved in many other companies that have gone public over many cycles in Silicon Valley. My objective is to always attempt to sell some portion of my position in each open window. And that's proven to be a very good strategy. The people who try and hold for the entire time sometimes get burned, and the people who don't take some off the table also get burned. So sell a little bit in every open window. In particular, say if you're an employee, that's also a big issue. You know, the trading window restrictions that happen as the result of having inside information restrict you. For example, Corey, my wife's an early employee at Google as well. This has been the strategy we've used with her stock ever since. Sell a little bit in every open window, and I don't think you'll ever regret what happens.
So at what point does that become obscene, though? I mean, we've seen other filings, you know, the Groupon filing, we've got insiders that have already sold $350 million worth of stock and trying to sell a lot of stock in the deal. Like, at what point do you evaluate a deal based on how much the insiders are trying to dump on the market?
Well, sure, you got to take a look at the total percent. And so Pincus's position will be worth something like $3 to $4 billion, and he's taken $100 million off the table. That does not strike me as an obscene number at all. And in comparison to what some of the other companies have done now that secondary liquidity is available, I think those are pretty reasonable numbers. And although I am an investor, I wouldn't be scared by that percent. And I think the percent sold is more important than the total dollars.
All right, Paul Martino, thank you so much for joining us from Philadelphia. Great to have your insights as an early investor and, of course, a friend of Mark Pincus. Thanks so much.